Since we achieved financial independence and retired early in 2019, our stock portfolio has made us hundreds of thousands of dollars every single year. And it's because year after year, the stock market has had tremendous returns. We have had returns of 20%, 30%. I mean, the last year alone, our favorite investment, VTSAX, is up more than 30% over the year. So if you know our story, you know that we retired with over $2 million in our stock portfolio. So imagine getting 20%, 30% year after year on that portfolio. And these returns are something that shouldn't be expected, but they are certainly welcomed. Now, if anyone has been investing in the stock market or considering investing in the stock market, there's a question that you are probably asking yourself. How long is the stock market gonna be on fire? Because it just seems to be relentless. It has been relentlessly going up. And so a lot of you might be asking yourself, when is the stock market going to crash? Hey guys, it's Aman
and Christina
from Our Rich Journey.
So in today's video, we are going to be talking about why the stock market has continuously been rising and what might trigger it to fall. So if you have been paying attention to the annual returns of the total stock market, you can see that we have been having really excellent returns, especially since 2009 up until today. Now you can see two dips, but on average, the total return of the stock market since 2009 has been incredible.
I mean, if you look year to date, the total stock market is up over 22%. And this may come as a surprise to a lot of people if you have been looking at the news, the political cycle, all of the chaos that is going on in the world. You would be surprised that the stock market is doing so well. Well, that's what we want to address in this video. Why is it and how is it that the stock market continues to move up? Why does it have so much resilience? And what's gonna happen to bring this party to an end?
So first, let's start off with something very important. The stock market moves in cycles. So that means there are periods of growth and there's going to be periods of decline. And while it feels like the market's on a roll, those highs obviously do not last forever. But what we do know is that corrections are inevitable, and more importantly, we know that they're normal. So just understand that historically, the stock market has always bounced back stronger. So if you are interested in long-term investing, those short-term drops should not derail your overall strategy. So let's talk about why the stock market is going up. And one big driver is strong corporate earnings. So companies, especially in tech, in healthcare, and in consumer goods, they have been posting really impressive profits. So this boosts investor confidence.
Absolutely. When you have investor optimism, people are investing with aggression. You see, people are feeling good about the future, especially with innovation driving new opportunities. Think sectors like AI, like healthcare, like Ozempic, and all of these medical breakthroughs in biotech. There is a lot of excitement about the potential in these industries. And that excitement fuels investor optimism, which pushes the stock market higher. Another big thing that is driving the stock market now is that lower interest rates are on the horizon. For the past couple of years, interest rates have been pushed up to deal with inflation, but the Federal Reserve has recently started dropping interest rates. And so investors are looking forward to the day when interest rates are lower once again. And when interest rates are low, people are moving their money from savings accounts, from bonds, into the stock market where they are expecting greater growth. The next thing pushing the stock market higher is government stimulus. Now, this is happening in ways that aren't necessarily apparent to the everyday person. But if you look at what's going on right now, with the government investing more in microprocessors, in technology, in healthcare, these are all things that are pushing up the most popular sectors on the stock market. So it's really important to read between the lines when it comes to how the government is moving money around the economy. Because in a way, this stimulus is a driving force in stock market growth.
Another thing to consider are stock buybacks. So companies are using their excess cash to buy back their own stocks, which reduces the number of shares they have available, and then it drives up the stock price.
And the last factor that is moving the stock market higher is the fact that more retail investors, everyday people, are starting to invest in the stock market. This time, like no other time before, has it been so easy to open an investment account and start investing in the stock market. I mean, you go to Thanksgiving dinner this year, I guarantee everybody's going to be talking about some sort of investment. Either AI, Bitcoin, whatever the case may be, everyone is getting involved at this point. And we feel like this is an amazing thing because the more people that participate means that more people can start to grow their wealth. But with all that said, all of the peaches and cream that are pushing the stock market higher, what could trigger a crash? Because that is bound to happen at some point with the stock market. So what is key is being able to identify what those triggers could be.
So the first factor is risk of overvaluation. When stock prices rise too quickly without strong fundamentals to back them up, we could be in bubble territory. And what do we know about bubbles? They eventually pop. I mean, look at the dot-com crash in the early 2000s. Companies were overhyped and overvalued, and when reality set in, the market tanked.
Now, this could be the case with all of the artificial technology excitement. What if we are blowing this out of proportion and AI is not going to be as magnificent as they say it is? People are pouring a lot of money into these companies, but when the fundamentals come out, will this be what brings the stock market back to earth?
The next potential trigger is geopolitical events. So trade wars, political instability, even a natural disaster. These can all shake global markets. So thinking back to COVID-19, the pandemic really triggered a massive sell-off in 2020, and we saw a massive drop very quickly in the stock market because of it.
Now that is something that unfortunately could happen again. And surprises like that, natural disasters, pandemics, all of these things can seriously crash the stock market. The next trigger, well, it's really two triggers, go hand in hand. It's inflation and interest rates. If inflation starts to get out of hand again, if we see that it is rising too quickly, that could trigger a stock market sell-off because investors know that on the horizon, the Federal Reserve is going to have to raise interest rates once again. So as inflation goes up, so will interest rates, and investors do not like that combination.
And it's really important to understand what this combination means as well, because when interest rates rise, it means that borrowing money becomes more expensive, not only for businesses, but also for consumers. That tends to slow economic growth, and then in turn, it pushes stock prices down. Now, the thing to understand about inflation is that when prices for goods and services move up too quickly, it can hurt corporate profits and consumer spending. If companies can't keep up with rising costs, their earnings will take a hit, and that will also show up in the stock prices.
And the last factor that could push the stock market down is investor optimism. I mean, right now, investors are very optimistic because the stock market is going up, but investors are very fickle. Something could happen. It could be the wind direction changes, and all of a sudden, people just don't feel that optimistic about investing in the stock market. Well, a contagion of negative optimism could take place, and that alone could push the stock market down.
So investor sentiment is so important because once people start selling, it can really trigger this domino effect where prices begin dropping very, very fast.
So we know the stock market will fall eventually, but the key is to be prepared for that day. And here are some things that you can start doing right now.
So the first thing is to have a diversified portfolio. You don't want to have all of your money in a single sector or a single stock. So spread your money across different asset classes like stocks, bonds, and real estate. Next, another important thing to do is remember to rebalance your portfolio. If you have seen huge returns in this ongoing bull market, your asset allocation, the original one that you allocated for your portfolio, may be out of balance. So go in and rebalance your portfolio so that it is at the target asset allocation that you designed when you started investing.
Now remember, we rebalance to minimize risk and optimize returns. It is a part of the investing process. Now don't use rebalancing as an opportunity to time the market. You have an asset allocation plan, and as a part of having that plan, it should have triggers as to when you rebalance. Maybe you rebalance when your asset allocation gets 20% out of whack or 5%, or maybe you're rebalancing every 6 months, but that should be something that is written down so that you stick to it as a part of a plan. The next most important thing to do is to have an emergency fund or a cash reserve. I know right now it feels like you just want to throw all of your money into the stock market. Well, what if an emergency hits and you need cash, but at the same time the stock market is going down? You always want to have money that you can access in the event of an emergency. You don't want that money in the stock market, because if the stock market does crash, you won't have the anxiety that you need that money for everyday expenses or for emergencies. Instead, you can have a long-term perspective and let the market recover.
The next tip is to always have a plan. What is your plan for what to do with your portfolio if the stock market drops? You always want to have that in mind in terms of rebalancing, dollar cost averaging, how much you're investing each month. These are really important decisions to make, especially when the market is down and your anxiety levels may be high. Now, for those of you that do not have a solid plan, you must check out our 365 Days to FIRE program. It is a year-long program with a lot of interaction with us that by the end of the year, you're going to have a full, complete, not only stock market investing plan, but FIRE plan. So we have monthly Q&As, we have smaller accountability groups, we have incredible meetups in the summer with everyone in the program. If you are interested in really designing the best plan for you, check out 365daysto-fire.com. We'll also leave that link in the description below.
So the final thing to prepare yourself for the eventual drop in the stock market is to always keep a long-term perspective. Like we said at the beginning of this video, the market moves in cycles. There are up years, but there are also down years, but the recovery happens time and time again. And usually the stock market goes even higher. If you look at any chart of the stock market, it's down here, but eventually time has taken it way up here. So even if you are investing in the stock market right now, with it at all-time highs, there will be more highs to come, because history has shown us that the stock market will not only recover, but it will continue to grow.
So will the stock market fall? Yes, eventually. When will it fall? No one knows. The best thing that you can really do is to focus on what you can control, like your investments, your mindset, and your financial goals. So hopefully this video gave you some food for thought in terms of how you can grow your portfolio. And if you like this video, make sure you give us a thumbs up, subscribe to our channel, and join the journey.